Good afternoon and welcome to the 8th edition of the LPs and GPs Spanish Conference. Thank you to each and every one of you for being with us today, here at the EY Dome in Madrid or connected online. We are very pleased to say that we are more than 150 PE professionals who are participating live this event, and I'm sure many others will watch it when it is uploaded at the end of the session. One more year, it is my pleasure to introduce our flagship private equity event organized in collaboration with ASCRI. Before we get started, I would like to thank ASCRI, its board of directors, and its management team for their continued support. I can truly believe that we can already give the resilience of this event as a proven fact. If in the first 6 editions we celebrated it physically in London, last year we had to do it virtually. This year, still under some capacity and travel restrictions, we have opted for this hybrid format. Our intention is to return as soon as possible to celebrate the event abroad, as we must not forget that one of the reasons for this event is to facilitate one-to-one meetings between LPs and GPs, taking advantage of a conference with relevant presentations on current affairs in the sector. In any case, and always with the challenge of improving the content of the past editions, we have prepared a very interesting agenda that we believe touches some of the most relevant topics of the sector today. First, Aquilino Peña, chairman of ASCRI, will give us a view on the private equity activity in Spain. Later, Ignacio de la Torre, chief economist of Alcano Partners, will share with us his views on the Spanish post-COVID economy. We truly believe that if there is any time to have reliable information on how the Spanish economy may evolve in the coming months, it is now. Gonzalo de Rivera, managing partner of Alantra, will lead a panel with LPs who will share with us their vision on the Spanish private equity sector and put it in the context with what they are observing in other geographies. We necessarily address the ESG topic again, but getting over the traditional approach to KPIs compliance to focus on ESG as a real lever for long-term value creation. And for this, we will have Inés Bargueño from EY Parthenon, who will moderate a panel made up of leading investors in sustainable investment. Lastly, Iago Montenegro, partner at Mundi Ventures, together with other prominent representatives of the venture capital, will let us know how the sector is evolving and their prospect for the near future. Let me remind those of you that are connected virtually that you can send your question through the chat within the virtual platform, and we will be pleased to share them with the speakers at the end of the presentations. Of course, for those who join us here, you can use the more traditional but always effective method of raise your hands. And now, let's get started. So, a very well welcome to each and every one of you. We hope you will enjoy it. I give the floor to Aquilino Peña. The audience is yours.
Well, hello everyone, and thanks for making it here. We are super happy to have you all here, both in presence with this hybrid format and everyone that's over the screens abroad. We should be in London by today, and unfortunately, we should be in the morning after having a big cocktail party last night. That's not the case, but nevertheless, we hope that this is more time effective and you get the messages. The idea of this LP and GP event is to bring awareness on what all GPs are doing in the private equity and venture capital ecosystem here in Spain, where we've had several record years behind us, and the outlook, and we'll see that with Ignacio, is still, we were just chatting on that, still looking very, very promising. So the idea now is to give you some of the figures of some of the info that we have, so you can get mostly, I mean, some of the people that are here are part of the industry, so you know most of the figures, but for some of the foreign LPs and people that are over the screens, the idea is to give you an overview of where we are, no? And for those of us that don't know I don't know if this doesn't work. Could you pass one slide? Okay. For those of you that don't know ASCRI, so we are the Spanish Association for Private Equity and Venture Capital, and ever since we started a few years ago in 1986, we've been growing steadily, and now we can say that we represent the vast majority of the industry here with our almost 250 members. Our goals in life are first to raise awareness on the positive impact and that we have on the economy, socially, creating jobs, taxes, paying taxes, and lots of taxes actually, and also on the broader impact with everything that we do with the companies we work with. Second big objective, and that's where this event comes through, is to bring more LPs and investors to our asset class. Our asset class is still underrepresented in lots of the portfolios, and so we want to bring awareness on the advantages of our asset class, and that's the idea of today. And lastly, and not less important, is we've become, over the last few years, the key partner for public administrations in terms of developing the regulation or lack of regulation, tax schemes, and now we are working with them in providing incentives for all of you LPs to invest in our asset class. So, as an industry, we are 464 GPs investing or with an investment or an interest in the Spanish economy. All those GPs have almost 40 billion in assets under management, of which 29 billion are invested in 3,000 companies, almost 3,000 companies that, as you can see here, have 448,000 employees. So we are a big part of the industry. We are very significant. We are also driving innovation. As you will see later on, our largest investor industry is technology. And 90% of our portfolio companies are SMEs. So we are aiming to grow those companies abroad. Oops. Sorry, there are two buttons. I get confused. So where are we in terms of our size? So we are ahead of the European average in terms of investment over GDP. And that has been the case for the last 3 years. And the gap between Spain and the rest of the European Union actually is slightly growing, no? Although we are far away from some of the countries we really do compare with, no? Like France or the UK. And investment has been growing steadily, and as I said, we've had a number of record years. And last year, 2020, despite the big pandemic, we've had the second largest ever, and we'll see the split between the different categories. We've had the second largest ever year in terms of investment in Spain, and the largest ever year in terms of portfolio companies invested. So over 800 portfolio companies receive investment in Spain. And the good news is that the trend is keeping on. So this year we are 20% over last year, almost 20% over last year, and with the things that are moving over the Q4, we expect that we will surpass last year's figures. So that's great news for all of us, and it also represents the power and the opportunities that lay in the Spanish industry. In which industries? So, I mean, and this graph you could see, and similar to other geographies, we are investing heavily in technology and ICT. And last year, obviously, healthcare did a big jump in investment. And if you see the mix of industries today, and you compare it with what happened 8-10 years ago, then you can see that it was mostly in industry and consumer products, but we are shifting towards technology and healthcare very rapidly. And the good news is that Spain still remains very attractive for international investors. And as you can see here, this is the bars are the number of investments led by international GPs. And as you are seeing, is a continuous growth, and almost 200 companies were invested by international investors, and I think that's great news. No? Spain is still a land of opportunity, and people that could invest anywhere are choosing to invest in Spain, which is great news for us. And again, similar to the investment figure, this you are seeing here, that this year the trend continues, and we are probably going to have a record year also in this dimension. And if you look at, if you divide the market between the big deals that are over, we call it mega deals, the deals that are over 100 million, and you compare them with the ones below 100 million, you can see that the lighter blue bar are growing steadily, and it's only the big mega deals that we are lacking. No? We had 19 mega deals in 2019, and we only had 7 of those last year. And that's what explains the drop in overall investment volumes. But you can see that underneath that big figure, overall figure, there is lots of life, and it's very, very lively. And middle market is super dynamic. I mean, I see many faces here that invest in this segment of the market, and there are lots of companies being invested, and the investment volumes have continued to rise over the years. And actually, there are, I mean, across all sectors, all geographies, so it's very widespread across Spain and across sector. So this is a very brilliant part of the segment of the investment. And obviously, venture capital, as in other geographies, is growing like crazy. And you can see that we had in 2020 we had a record year with above 672 deals, and only this year above we are in 1.2 billion, which compares with the 800 million of last year. So we expect to end up above 1.5 million. And this is really a sign that the Spanish entrepreneurs, and you will see some examples later on, are really doing global companies, are attracting international capital, and are doing very large rounds. No? And the pool of companies where the international and local GPs are investing is really large. So we have a great pool of talent that is very capital efficient, and that are achieving and are being much more global than they used to be. And now that these companies are, I mean, we have Flywire there, which is one of the first Nasdaq IPO of a company of Spanish origin, and we have several companies that will become unicorn. No? This is a study that we did with other organizations of the Spanish ecosystem, and with Dealroom and they took a look at the full venture capital ecosystem and all the different individual companies, and these are the companies that they identify as unicorns. No, the companies that are going to become unicorn in the next few months. No, so lots of activity, lots of activity, and lots of returns coming up. And fundraising is still, it's remained active despite the pandemic that has, I mean, and all of us that have been raising fund, that was a big impact, and there was a few months where everything stopped and the clock stopped. But even with those slow months, the amount of capital raised has been similar to those of previous years. And we've also had divestments, despite the fact that, again, because of the pandemic, everything has been slowed. But when we compare this year to last year, we start to see some pickup in the figures. So this is all I had to show. And again, I think we are living a great momentum in Spain with lots of companies where to invest in, very good returns. We published a study with ICO, who's one of the largest investors in Spanish GPs, and they are having, you know, great returns based on the quality of the companies where we invested. No, so happy times for us, and I hope you can share the party investing in our GPs and all of the LPs that are here and over the screens, and hope you enjoy and learn lots of things with the panelists that we are going to have now. Thank you very much, and hope you enjoy it.
Well, good afternoon to everybody. Thank you very much for coming. I'm now leading to host the next panel, which I think has an inspiring topic, which is the views of LPs about private equity activity after the pandemic. I'm not sure that after hearing Ignacio, we should say after or while the pandemic. But in any case, their view on the private equity activity, and especially compared to that of other European markets. In the panel, we have three very knowledgeable and senior participants. Allow me a few minutes to introduce each of them. Starting physically here, being present with me, on my left-hand side, we have Greg Ciesielski from Harvard Best. Greg has been with Harvard Best for 14 years and is a managing director on their secondary investment team based in London. Greg focuses on global secondary investments purchased through both traditional and more complex transactions, such as GP-led liquidity transactions, including transactions in Spain with Portobello Capital and Kibo Ventures. Greg is also leads the ESG integration in the firm's secondary investment activity global. Harvard Best has committed more than 48 billion to newly formed funds, completed over 29 billion in secondary purchases, and invested over 23 billion directly in operating companies. Hi, Greg. Thank you very much
Hello.
for being present.
Thank you for the introduction.
Thank you. We also have, in this hybrid format, on the screen through video conference, we have Uwe Fischhauer from Yieldco Investment. Uwe is founding partner and managing director of Yieldco Investments AG in Munich, Germany. Yieldco established in 2011 as an innovative alternative investment service provider with focus on the asset classes infrastructure, private debt, and private equity, offering multi-manager portfolios, co-investments, and managed accounts, solutions, and advisory. The company presently manages approximately 7.1 billion euros in capital commitments from institutional investors and family offices. Uwe, very welcome. Thank you very much for being available.
Hello from Munich.
And last but not least, we also have Martin Corredera, which is probably the only name that I pronounced correctly. Martin has been in the EIF for 4.5 years, and he's a senior investment manager currently leading the lower mid-market equity team focused on the Iberian market. Over his 16-year of professional career, Martin has primarily focused on structuring direct and indirect equity and quasi-equity investments for SME growth and market developments in both Latin America and Europe. As you probably all know, EIF is a leading financial institution in the European private equity market. And over the last 25 years, it has deployed more than 28 billion in more than 1,000 private equity and venture capital funds, which has allowed the EIF to promote best market practices and corporate governance for the teams it chooses to support. Martin, thank you very much also for making yourself available. And welcome to the panel.
Good afternoon, and thank you, Gonzalo, for the introduction. It's a pleasure to be here with you all today and to be able to participate in this panel with Uwe and Greg.
So, as I said before, I think we have an inspiring topic, which talks about, looking forward about the private equity Spanish industry, and especially in comparison to that of other European markets. But before we go to future, I would like to ask you guys a bit about the context, historic context and current context. I would like to start by asking you, in your views, how has COVID-19 impacted the Spanish private equity activity, and especially on relative terms to that of other European markets? So perhaps, Greg, if you'd like to start with that.
Yeah, happy to start. I guess first on a personal side, having been invested here and having many relationships here, I can recall back to talking to people in Madrid who went through it, I think, before the rest of the world did, and just kind of how they dealt with it at that time, way before the financial stuff of going through the real crisis and having their companies, how they could help out, and the fears and those things. And it was inspiring to see people come through it, and it's very exciting to be back here again a couple years on and seeing how excited and I think proud people are here of what they've accomplished through this. So that's been a great experience. I know you want me to answer Spain relative to others, but I think what we've seen in COVID in particular was an acceleration of trends that were probably there, that were probably going to play out over the next 5 to 7 years, that probably occurred over about 2 years. And that's been what we've seen. So we haven't seen it as one geography versus the other, although there are differences there. It's been sectors, industries, and where you're focused that the recovery's been. And there were some people and trends that have been huge beneficiaries of that, and some that have lagged behind. So I think what it's shown is a reordering of the economy, and it's actually probably more interesting. We saw the slide up there with all the companies in Spain and the venture capital. You know, people like Glovo and those who've had benefits from that have accelerated. So we've seen more the acceleration of trends that it has occurred and is continuing to occur, and is just kind of remaking the landscape of private markets.
Thanks, Greg. Uwe, do you have a view?
Yeah, on the one hand, happy to agree with Greg that we have seen certainly an acceleration of different trends, and I would also agree that I don't see a better or worse behavior of Spain compared to other countries. So it depends much more on the single company, I would say, if there has been a specific impact of COVID on the single transaction or not. So uh, it's impossible to say that there have been a worse behavior, better behavior of Spain if you compare to other countries. What we have seen in whole Europe, I would say, and also in Spain, has this been slowdown of activity, investment activity, as well as exit activity for 3 to 6 months, high uncertainty in the markets, also affecting some LP allocations. I think we will discuss this point certainly later. Nevertheless, I think there are post-COVID very good opportunities to buy well now for Spain and even for other European countries. The only thing what concerns me a bit, and Ignacio before was very positive on the economic outlook, what concerns me a bit is let's say that Europe is still characterized by official programs, fiscal support that will end of this year, and so I think it might postpone, so it has postponed the obligation to file certainly some kind of insolvencies, and that might affect some companies certainly next year with regard to potential defaults, etc.
Okay, thanks, Uwe. Martin, would you like to add something to this point?
Yeah, I can complement to what has been said. I couldn't agree more with the trends that are developing in the market. Particularly, fundraising has experienced and is still experiencing some degree of volatility, and definitely deal activity has declined across most geographies, but still 2020 investment volumes in private equity in European countries have remained above those achieved back in 2017. And moving on to some specifics about the Spanish market, while the data on deal activity in Spain for this year, for 2021, is far from final, with a number of transactions expected to materialize during the last quarter of the year. The previous 3 quarters have shown very promising numbers, as mentioned by Aquilino, with deal activity, and this is an important trend, recovering at a good pace. And actually, this positive trend is favored by a stronger reliance by market participants on telework in specific parts of the investment process. Another trend to follow in Spain is the competition in the middle market, and the market dominance of the Spanish fund managers in this segment is starting to be challenged by international GPs. And in 2020, we saw a significant increase in activity from international managers that typically targeted the upper middle market, which in turn is increasing competition for the top quality assets. And at the same time, we start seeing some domestic fund managers to expand their geographical allocation to their neighboring countries, but still with a lot of caution, I would say. Perhaps something that Aquilino also anticipated, and is that at the sector level, investments in technology companies have proven the most resilient, with volumes actually dropping just 5% in 2020 as compared to the 23% that we have seen dropping for private equity as a whole. But in Spain, we have seen a similar trend, and investment volumes have significantly shifted from consumer goods and services to technology and software, and in particular those that obviously are geared towards connectivity, increased productivity, and digitization of internal processes. And even though ICT volumes in Spain are skewed because of some large transactions, it was mentioned before, Idealista, MásMóvil, the deal count in 2020 also increased significantly from 14 to 23 deals in this sector. And whether Spanish fund managers will return to consumer goods and services as before, or this shift will become structural in portfolio allocations, it will be a question that many LPs will be asking as the next batch of funds comes to the market next year. Valuations continue to have an upward trend as well. Multiples continue to be high, and we expect that pricing will continue to stay at high levels during the next several months. And then in terms of exits, we saw in 2020 a low volume in terms of divestments, but it's true that also write-offs more than doubled when compared to 2019, but still it's far from the amounts written off per year during the period that goes from 2008 to 2015. So we had lots of volatility in the last year and a half, but the expectations regarding the state of business in the next 12 months is generally positive, and this is based on the market sentiment surveys launched by a European investment fund. So still dependent on Q4 numbers, 2021 may still be another remarkable year. As I mentioned, the overall impact of the pandemic didn't slow down the lower mid-market activity in 2020, and I expect that this year to hold to these expectations.
Thank you, Martin. A lot of interesting data that you've provided. Now, looking forward, we saw in the previous presentation, we saw Ignacio saying how private markets are underrepresented in relation to public bonds or real estate. So going forward, a question that I have for you is how do you see LP appetite towards putting money into allocating to the asset class of alternatives in general in Spain? I think you've mentioned something about that, Uwe. Could you please reflect on that?
Sure. I think, as Ignacio already mentioned, there's a strong trend towards equity, and we expect also to continue to see this trend. It looks like we have a bit the opposite of the so-called denominator effect we have seen when the public markets crashed in the past and people had to sell private market allocation. Today, there's a strong trend towards equity allocation, and in order to diversify and not to being too dependent on just public market exposure, we see really a significant number of institutions entering now, increasing or entering the private market allocation. There's no doubt about it. It might be then also the next decade might be the decade of private markets. It's my impression. We see, I think also in Spain, I think a number of institutions increasing allocations or entering the market. I think we see a number of new LPs, new clients with quite smaller pension funds, even with a limited number of assets under management. To be honest, normally they would not have been able in the past to enter alternative investments, but today the pressure is so high that also smaller institutions have to look for alternative investments, private markets. So that might also help the trend, or will certainly help the trend towards private markets more and more. What we see, I think, as well is there are new asset classes besides private equity, like infrastructure and private debt, which are much more conservative, which have a stronger yield focus. We see also this trend that some institutions who still do not have this appetite, or still does not have this appetite for private equity, as it's associated with higher risk, are currently entering private markets via private debt or infrastructure allocations to get to know this kind of private markets allocations. But now also increasing, looking for diversifying within private markets and moving into private equity. So there's a positive perception, I think. COVID demonstrated also the good valuations or the stability of private markets within the whole macroeconomic context. ESG is an increasing topic and request, and private markets are able also to cover this topic. So I would expect really also for the next decade and increasing allocations to this private markets. And I expect the same. This also, especially also for Spain, which has still, I think, a backlog demand. I think insurance companies or pension funds have an allocation of up to 1% in what I read in different surveys, which is, to be honest, nothing compared to some allocations you see in UK or in US, where you have up to 30 or 40% allocations to private markets.
Thank you, Uwe. Greg, do you share the positive view?
Yeah, I will repeat what Ignacio said, but I think there's two big things I see happening. One is exactly what he said. It used to be that you went to private markets to get excess return by taking excess risk, right? And that's why pensions in the U.S. who had gaps and those things started to come into it. And that was what we were taught when we were coming out of university. We're in a different world now, right? There is no riskless asset. So the job of asset allocators is to choose their risk. And I think a lot of them are determining that private markets are an interesting risk reward. So that's one. And then the second one is we and our peers at the front end of this, you're seeing the groundwork's being prepared for retailization of private equity to come in. It's already in the high net worth channel. That's moving down. And you have that inflow on the horizon. So I think, I won't make a cyclical prediction, but kind of on those two secular trends, money's coming in, right? And that's happening. So the rain's coming, and I think the question is, how good is the bucket you're holding at the point of time that comes in? And I think Spain's is strong right now. I think it's you're seeing that growth in the venture community. You're seeing established players in the private equity community, and I think you capture those inflows, which I think are going to be coming over this next period, and it's new people coming in. It's different people who do that, and what you'll find with LPs is we're incredibly sticky, right? If we get into that asset and you do a good job and continue to do a good job, they will stay with you forever. So I think it's about catching those people as they come in on the front end, and I think right now we're in one of those periods where that's happening.
Thank you, Greg. Looking also now, changing a bit subject, looking about forecasted developments in the industry. I think one trend that we are all seeing, at least all GPs are seeing, is the increasing interest towards impact investment or ESG-driven performance. So is this an unstoppable trend, or is it really overrated? I think that's one question for you guys. And the second question related to this topic is, how do you really measure ESG and impact-driven investment in terms of returns? So perhaps, Greg, you take the ESG at your firm. So
there's a lot there in that question. Obviously, I'm extremely excited about ESG, and I think HarborVest can play a unique role, because what we do is we laterally connect GPs. So what we really seek to do is to kind of establish best practices, and European best practices ones here are ones that we have spread, right? We have our US managers are coming to us to say, what is the best standard of this? And those best standards are coming from here in terms of reporting, in terms of background. So I think that's one aspect. ESG in private markets, because we're active managers, is incredibly exciting. In the public market, you kind of are seeing a pretty binary choice, right? And with index funds, with all that, of I won't invest in this or I will invest in this, here you can actually change things in your ownership. And I think that's an incredibly exciting trend. We're putting a lot of work into it. A lot of people in this room are putting a lot of work into it. I know that. And I liken it to the electronic vehicles, right? Like there's a lot happening in the background for many years, and it takes time to get the reporting frameworks, to get the tools to analyze these, to get those. But that stuff's happening, and you go from this thing being a theoretical thing to now you're like, well, probably my next car is going to be an electronic car, and probably most people's next cars are going to be, and that's coming, and that's here. And what you're seeing as that happens is the value is accreting to those companies, right? Because everyone's making commitments to ESG, and there's a premium placed on that. So inherently, those are becoming more valuable, and the opposite is happening as well. Companies that are kind of ESG dead ends, those are waning in value in the eyes of private markets, and those are the people who decide it. So I think I've been doing it for 5 years with the firm now, and this is by far the most exciting I've been about it right now, and I think it's very real and definitely here to stay.
Thanks, Greg. Martin, any other forecasted developments, either on ESG or other topics? I don't know, for example, generalist investment versus specialization, for example, or any other forecasted developments that you might be seeing you would like to share with us?
Just to briefly complement what Greg has said. So we also see the current context accelerating the development of two market trends. The first one is ESG, and the growing pressure does not come only from GPs and LPs, but also from customers and shareholders, which is translating into even more attention into this topic. And we expect this trend to continue, and we see more investors incorporating ESG indicators into their decision-making activities. The second element that is gathering greater attention among the investor community is diversity, equity, and inclusion. And with discussions around this topic accelerating rapidly among LPs and GPs. And in fact, there is a growing consensus on the need for greater attention and action. And this trend is making GPs and LPs to start identifying and tracking DE&I metrics, both internally and at the portfolio company level. And this is expected to really make significant progress in the coming months and years, and will, in my opinion, definitely contribute to a more profitable and sustainable industry. And briefly to touch on the overall market, so and specialization in the industry in Spain. The current market, the current Spanish market doesn't allow for the specialization of GPs. It's too small for that. So we will continue seeking investments in generalist funds with some degree of thematic angle around competitiveness, including internationalization, and also around innovation, impact, and green transformation. And perhaps, not sure if we have the time, but I will just introduce the topic. A significant contributor to fundraising growth in the European markets in the past few years, and also globally, has been the expansion in the number of strategies that GPs are pursuing. And this is a trend that is starting to gain traction in Spain. This trend is shaping around product proliferation. In other geographies, it's actually both product proliferation and also geographical expansion of the GPs. And this practice is becoming more common within the multi-asset managers and the more consolidated private equity fund managers in Spain. And the most common for multi-product strategies are obviously private credit, and also equity strategies targeting different market segments. And I'll stop here just in the interest of time, but this is a topic that we can definitely discuss further with the investor community.
Yeah, interesting topic, of course. You're right that we should be moving on in terms of timing, but I think one thing the audience would like to know is trends in fundraising. I mean, you guys are LPs, you're present in many of the GPs in Spain, and certainly, fundraising trends is something people would like to hear about. There's primary fundraising, there's secondary strategies, and there's co-investment strategies. Let me start by the co-investment strategies. Is this a myth or a reality? Because I've heard, from some of my colleagues that many LPs seek co-investment rights in many of our funds, but sometimes the reality doesn't meet the requirements of the LPs. I don't know if you guys share that view with me, but at least to make some consideration here. Uwe, you have co-investment programs. What do you think about co-investment in terms of fundraising? Is it going to be increasing? You see that as an interesting aspect for the Spanish market. What's your view on that?
Yeah, as I have a co-investment program, I have to say I'm quite bullish on co-investments now. But no, that's not the topic. To be honest, I think your point is very fair. You made it. It's a bit a function of a booming private market allocation of LPs. LPs are maturing, going away a bit, in some cases, starting with fund-of-fund solution, doing then to direct primary, and then also looking for co-investments. Nevertheless, there are a lot of talks about co-investments, but at the end, it fails sometimes in the execution, because co-investments means that you need to act quickly, to react quickly, and you have certain kind of cluster risks, and also in your portfolio, you should not forget. And it's easy to talk about interest in co-investment if the market is booming and all valuations are going up and so on. On the other hand, we have also seen if the market goes down, and in some cases a co-investment which fails, and a co-LP does not have the time does not have this kind of asset management capabilities to deal with specific co-investments. It's an issue for some LPs. So I think you have to think about it, and certainly don't forget the level of diversification as an LP you're looking for. But currently, I totally agree that there's a lot of talks, a lot of appetite in general on co-investment, but often I would say it's still fails with regard to the execution. That's why it's a bit a myth, but certainly increasing interest.
Thanks, Uwe. Let's talk about secondary instruments, Greg, which have robust as a significant present. As a way to accelerate liquidity, as a GP fundraising complement, or as an alternative for M&A transactions as an exit. What's your view on the fundraising on secondary instruments?
Yeah, happy to talk to. On the co-investment side, you had the stat, but I think we've done about 28 billion of it. So yeah. I think we're trying to do our part on that front. But yeah, I represent our secondary team, and similar to the private equity market, I think the entire time I've been in it, it's been one of the fastest growing portions of the private equity market. It's going to be $100 billion market this year, which was literally inconceivable to me fairly recently. And I think what's most interesting about that is this is probably the most exciting inflection point of growth that's occurring. So I think the question is, why is that? And there's been two big sea changes in the time I've been in this industry. The first was after the GFC, where basically a bunch of large pensions and others said, I'm going to manage private equity like any other asset I have. Portfolio theory, that means I'm going to sell it and exchange it. And that was the traditional market, which grew to be 50, 60 billion over the course of that. And then the second one is what we call the GP-led market. And we talked about a COVID accelerating trend. That's probably been one of the biggest COVID accelerating trends around. Was we've been doing this for 8 years, I think, since the initial stages of doing these deals, but it really just hit overnight, and I think everyone kind of saw the technology that's been created. And the essential of that is that the analogy I like is that in private equity, the assets are kind of the bus, and the bus is going down the road, and more people are deciding, you know, I'm going to get off it at this point, I'm going to get off it at another point, and a lot of general partners are saying, well, why am I selling my best assets just because I'm in this delay, and why am I giving that to my competitor? Why can't I continue to pursue them? And that and some other considerations have driven this GP-led one. So I think it's an exciting asset class. It's a growing asset class. I think the things we can do in it and have done in it are very interesting, and there's LP appetite for it. And the reason there's LP appetite for it is because it's a risk-adjusted return. It's a very low loss ratio product because you're entering into assets that are calibrated and known, and you're entering them midstream. So it's a good time in that we have appetite from the limited partner community and a large deployment opportunity on the other side. So hopefully strong continued growth in that over the coming years.
Thanks, Greg. On the primary fundraising, very briefly, Martin, main trends that you would like to highlight?
So it's just to mention a few remarks. So obviously it's been a turbulent year and a half, and following record activity in the private markets in 2019, fundraising in 2020 declined across most asset classes and regions. And despite this situation and despite the global trend, fundraising levels in 2020 in Spain exceeded those of 2019. And although volumes raised still lag behind those in 2017, this persistency in fundraising during such a challenging period is a strong indicator not only on the quality of the domestic private equity market, but also of its potential for growth, particularly within the private equity and private debt market segments. What is striking, at least to me, is that almost 2/3 of the capital raised in Spain in 2020 came from family offices, private investors, and government agencies, with the large majority of these being domestic investors. And this means, that, in my view, this means that there is still a lot of potential for growth in terms of fostering access to the asset class to insurance companies and pension funds, and also attracting the large pan-European institutional investors, while at the same time reducing the dependency on public support from the 25% that is the metric in 2020 of volumes raised, closer to the European average of less than 10%.
Yeah, thanks, Martin. Actually, you touched upon some of the topics of my next and last question, actually, which is, what next? What are the main challenges and opportunities for the private equity Spanish industry, going forward, in your views? So, Uwe, perhaps, could you start with this one, last one?
Sure. What are the challenges? I think on the one hand, what I mentioned before, the lack of local investor base we have seen so far in Spain was a challenge, I would say, in the past for some Spanish GPs. It's from our side, it's important if a country-specific fund in Spain does not have any local investors, and we have seen it in the past. That's strange. I think it's changing. It's improving a lot because, as I mentioned before, a lot of Spanish LPs are currently entering the private markets and also giving commitments to local funds. So that's on the one hand, it has been a challenge, I think, but it might be more and more opportunity also for local funds to get, let's say, local money and to demonstrate it abroad that they have also a strong local investor base, which is often quite important also to see for investors from abroad. The other point, and it has been mentioned, there are a number of new investment themes. I think there's an increasing trend to sector-specific funds, which is difficult to launch a sector-specific fund just for a country like Spain. So perhaps to think about a bit more outside Spain, also for the local GPs. I know that there's a strong focus, there's a strong mid-market, there's a strong pequeñas y medianas empresas, also Mittelstand in German, the small and mid-market companies, family-owned companies. Nevertheless, the Spanish GPs compared to other European GPs, even in Germany, I think still have small fund sizes, and perhaps like in Germany, where we have the focus on the so-called DACH region, or the Scandinavian GPs having the focus on the whole Nordic region, it might be also good to see some Spanish GPs thinking also more also to invest, for example, in Italy or in Portugal, because I think there will be increasing international competition certainly, and we've seen a fund from Switzerland like Ufenau, who's now acting and investing in Spain and having a hub now there in Spain. So there might be certainly also increasing competition from GPs. European GPs to invest in Spain. On the other hand, I think it's also like the opportunity is there because it's not only a great country, Spain, and I think it's a good hub to establish managers. And we have seen the example of, in the infrastructure space, for example, of Asterion, who was able to launch a fund in Spain where they have a Spanish hub there. They get talents there because I think there's the cost of labor is lower, we have learned, compared to Germany. You get talents there, you get good people to Spain also to start to launch activities from Spain, which might be also an increasing opportunity, I think, for Spain in the future.
Thank you, Uwe. Greg, any remarks that we would like to highlight?
I think a lot of it's been said, but maybe to highlight a few of those points, that as an American who lives in the UK, you're not going to be able to recreate that pension system, that incubation, and capital is one side of that. But the other side of that is that starts private equity firms. Then inevitably, those people leave those private equity firms and venture capital firms, and they start other firms, and they go into operation, and that's the ecosystem effect that's created. So it's not just the capital. It's the ecosystem. So if you need to go abroad to get that capital, as I think I said, I believe it's coming. So are you in a place to receive that? Do you have the infrastructure? Do you have a platform that's designed that way? Do you have an investor's relation function? Do you have the ability to onboard and accept those clients? Do you have the ability to market to them as they're there? I think it's a question of you do have to work harder. Are you ready for that opportunity and to take that? Because otherwise, I think Spain's an attractive place to invest capital. Someone else is going to invest that capital here, right? And it's about doing that and creating that infrastructure. And I think being ready for the moment, which unfortunately requires a bit more work when you don't have that kind of local engine that inherently drives it.
Absolutely agree. Martin, I don't know if you want to add something, or you already pinpointed some of the topics, but or challenges and opportunities. Any highlights you would like to make as a closing remark?
Yeah, just to wrap up, for LPs, most of us are seeking to increase or at least to maintain our exposures. And so far, investors have been rewarded for sticking to their alternative programs. Private equity returns continue to outpace those of other financial assets. And obviously, the asset class has proven its resilience during the worst part of the pandemic. Just one additional minute on the highlighting within the what's next is what are the main business risks that we see across our portfolio in both private equity and private debt, and which are connected with the price increase in energy and raw materials, and with supply chain disruptions that several companies in the portfolios are experiencing. And inflationary pressure is still contained, but it's very real, as seen in the latest numbers made public, 3.4% in the Eurozone in September, a maximum since 2008. And the supply chain disruptions, particularly in semiconductors, wood, and other raw materials, can make the situation worsen. And it's still too early to know whether the trend will be temporary or structural, and we will be following Ignacio de la Torre very closely, as always. But at the same time, it's necessary for investors to start thinking about the implications of an increase in inflation particularly as margins in some companies in our portfolio are being squeezed as it's becoming difficult to pass through the price increase to the final customers, and also to start thinking about assessing the impact of the on the portfolio companies in a scenario of interest rates going up, particularly in terms of the impact on leverage. Thank you.
Thank you, Martin. I know we're tight on time, but perhaps a few minutes for Q&A. If there's some questions, either from the audience or people connected on the web. No? Well,
Comprehensive.
comprehensive. It's been a very comprehensive, I think, interesting panel. Thank you very much, Uwe, Martin, Greg.
Thank you.
Thank you for your participation.
Thank you all.
Thank you for holding us.
Thank you.
Thank you.
So, welcome. We have to talk right now about ESG and sustainability. So let me introduce before our three guests. They have a deep knowledge about this ESG and sustainability. And when we talk about deep knowledge about ESG, it's something really important right now. It's the elephant in the room. So, and we don't have a lot of experience. Elena Rico is a telecommunication engineer and MBA, more than 15 years of experience as an investor in companies with growth potential at Caixa Capital Risk. And there she became a COO. She promoted the creation of new impact investing management, people and planning partners to finance and support companies that through technology try to solve some of the social and environmental problems. And this experience is really the background that helped her to be part of the Impact Partner, right now as a managing partner. And she is also a board member of Mutua de Propietarios, an independent expert for the European Commission. And we have, thank you.
Thank you.
And we have here Paulo Matos. Welcome, Paulo.
Thank you.
Paulo is a co-founder, managing partner, and CEO at IG4 Capital, and is one of the founders of the firm. Paulo is currently the chairman of Igua Saneamento S.A., one of the largest private water and sanitation concession operations in Brazil. And prior to founding IG4, Paulo was a partner at Aircar Partner, a leading advisory firm specialized in debt restructuring and operational turnarounds. Paulo holds a J and PhD in law from the University of Sao Paulo and was a visiting Fulbright school at Yale University. Welcome, Paulo. Thank you. And last but not least, Barbara Brida. She is executive director at LGT Capital Partner. Is responsible for the business development of Italy and Iberia since 2017. And previously, she gained a long experience in financial sector, working for Societe Generale, CIB, and Mediobanca. She graduated in economics and finance in Université Luigi Bocconi, specializing at SBA Bocconi and in SEAT. Welcome.
Thank you.
Before to start the conversation, I just start with a joke. What I like is a few months ago to start counting the numbers of time that you can hear ESG and sustainability in a conversation. It is crazy because in 3-4 hours meeting, you can hear around 25, 30 times ESG and sustainability. We are right now in the 12th, so on 12, and I assume that at the end of this meeting, we're gonna go through this 25, 30, 40. Right now, the idea is to talk about sustainability, understanding if we can find a real correlation between this impact of the investment and the traditional element that we use to evaluate private equity investment. We would like also to talk about the role of geographies. It is important, the geography where we are going to go through, about the sectors. And finally, we would like to highlight the challenge and opportunity that we can find in the Spanish sector. So let me to start with Elena. So continues with this idea and the joke about the names of time that we hear the sustainability. Sometimes it seems that sustainability or business investment is more like a marketing strategy. And it is not something that we are trying to do in order to get a real impact in the society. Being part of a ESG focus fund or an impact fund, like you like to explain your experience, how do you define your strategy and how you prioritize really the investment on the element that you would like to invest through?
Exactly. So thank you very much, Ines, for the presentation and also to ask you to allow us to explain our experience about these topics. That, as you say, everybody is talking about impact, about sustainability investment. So Impact Partners started in 2007. So at the end, it's one of the pioneers when we are talking about impact investing around Europe. And I think that because we are pioneers, we have or we like to take this responsibility to explain the concepts perfectly, no? And to be very strict or very radical, if you like to say, no, with this approach of impact investing. So we have three main pillars to define all our activity in the GP. So the first one is the intentionality. The intentionality means that the first thing that we take, it's a social problem around Europe. And we try to find specific companies that the main purpose is to solve these problematics around Europe. So with an example, I think that it's more clear, no? If we are talking about education, inclusive education around Europe, it's a topic that the European Commission is pushing, no? If we are talking about dyslexia, for instance, that it's a problematic that it affects 50% of all the population around Europe, it's a huge market, so interesting market to invest. For instance, we invest in a company that makes or produces books adapted for these special reading difficulties. So this is the perfect match, no? And the intentionality. We have a clear problem in a huge market and a company that used the technology in this case to solve this specific problematic in the kids, no? So this is one of our pillars to define the main strategy. The second one is the contribution, no, of the GP, of the investor, to solve this social problem. And how we do that is because we define a financial business plan, like all the investors, but also we have another parallel business plan, that is the social business plan, with specific KPIs to follow. So we make this previous to the investment, and we follow all this business plan during all the investment period. And this is business plan. It's linked to our carry, that this is other specific ingredients in our sector, no? That we will have carry if we have a good performance in the funds, but also if we have a clear social impact in the society regarding these metrics, no? And the third pillar is related with these metrics, no? We need to define a specific metrics that continuously we can measure. Doesn't work if it's a report at the end of the year, if it's assessment of a specific point. No, we need to really to follow specific metrics. With another example, it's very easy to understand, no? For instance, we invest in a company that makes recycle of the mattress, of the colchones, no? So to do that, the company has as employees people that only comes from the prison. So we also looking for a specific problematic that it's the insertion of this target. And we deploy a really good business that permits to solve this problematic at a social way. So this is our basics, and I don't know if can help maybe to clarify some concepts.
That's perfect, Elena. And Elena was talking about pioneers and who is going to lead, Paulo. We assume always that the West or developing countries are the key to this wave of sustainability. But what is that true? And the second point is, what is the role of the developing country? They are going to be just a recipients, or they are going to be a proactive geography where we are going to find this investment?
Yeah, well, thank you. Pleasure to be here. Thank you for inviting us. Well, I think what we've been trying to do at IG4 Capital is to focus very much on Latin America as a region in which we have developing countries or emerging markets in general. And the approach that we've been trying to have in Latin America is towards ESG, and that connects with your question, is if we use ESG as a filter or as metrics to source companies that are already good or with high standards in ESG in emerging markets, generally you won't find many. You'll find a couple of them, but not many. So what do? You just don't invest in emerging markets, or you can do something different. What we've been trying to do, and we've been doing that actually based in London, where we have our funds today, and I'm based in London, and we have here an office in Madrid, also where Gema Garrido, our global head of ESG, she's based in Madrid. So we've been using ESG metrics. There are high standards of ESG metrics to use as KPIs to turn around companies. So we like to call that ESG in action. So it's, instead of having ESG as a filter, use ESG in action to transform companies. And with that, I think, yes, I think the emerging markets, they are key. And they are key, especially because we can have in emerging markets what sometimes in economics we can use the concept of leapfrogging effect. So in Europe, for instance, or in developed economies, everything is already there, but you have to change it, but it's sometimes more difficult to change because you already have, for instance, infrastructures, they are already matured, you have companies, they're already matured, through corporations. So to change that in developed markets, sometimes it's more costly and more complex. Why is that? Because in emerging markets, you have a lot to be done. There are a lot to be done, things that are not yet built, that you have to build. And then you can build using already new materials, new ways of managing companies in a more sustainable way. So that's what we've been doing, and we've been trying to really buy and improve companies using the ESG metrics as the key component for turnarounds. And I think that could be something that to be replicable in other emerging markets, not only in America.
Thank you, Paulo. And now, Barbara, and we're going to go down really to the field. You have in the investment digital learning company, Wind Turbines, Microfinance Bank. Did you find a real correlation between the impact of this investment compared to the traditional business and the traditional financial metric of private equity? I'm talking about correlation between cost and devs cost, performance, valuation. There are a real relationship, a gap?
Yes, thank you very much, first of all, for inviting us. It's a pleasure to be here today and share our views. I think this is a very, I would say, pertinent question. It's very important for our sector on the impact investing side. Just to give you an idea with a few numbers, so where we come from, now at LGT Capital Partners, so we have basically, here we were speaking a little bit about private equity investments going into impact investing. No? So our platform, just to give you some numbers, now it has $40 billion under management in private equity. This actually with more than 600 primaries and more than 300 advisory boards. If we see that basically that journey has started 22 years ago. If we move to the first, so to say, impact investment that we have done, that goes back to 2010. And in terms of assets, that represents up to now, we have deployed something like $800 million. And this corresponds to basically primary impact investments and co-investments. So you see basically the scale and basically the opportunity that we are talking about. But in terms, that's even more pertinent to the question, in terms of track record, in terms of performance, I have here only the gross numbers for the impact investment side. But basically, through 2010, the yield that has been achieved is something like 30% on a gross basis, with a multiple of 2.3, 2.4 roughly. So here we speak basically of returns which are really private equity-like returns. So what we tend to do at LGT Capital Partners as a firm which has more like a global approach, a diversified approach, the idea of constructing diversified programs, investing in primaries, in co-investments and secondaries, also on the, so to say, impact space. The first important things for us is to chase commercial financial returns in companies that are able actually to deliver what? To deliver impact, so social or environmental impact, which is measurable and it's positive. So the idea is really to combine these two aspects. How is it possible to achieve that? It is actually, it's mostly, I would say, a characteristics of the impact themes that we are following. So we are following also 3 main pillars in our choice, so which is the climate action theme, which is really now becoming more and more important, which does not only relate to renewable energy, but it relates to the circular economy. It relates basically to any sector, to any industry. The other pillar, which is still very important, and also Elena has spoken about it, it's about inclusiveness, inclusive growth. What does it mean? It really goes down to the developing countries, as also to situations that we find in developed countries of people that really are lacking some type of services or are suffering some difficult situations. And the third pillar, which is actually more important also in the developed country, is on the healthcare side. Not what we have seen, basically, especially also with the pandemic, what we need now in this specific concern. So I don't know if you want me to bring some examples, or we then...
Continue with some examples.
I think in the portfolio that we are building, in the latest approach, it was interesting to find, for example, a Spanish company which is specializing in the agro business. It's called Sustainable Agro Solution, and it's active also in developed countries, but also in developing countries. The idea here is really to provide products which are environmental friendly in the agrotech business. And this is very relevant because if we think of what is happening on the climate side, it's really farming, it's really at risk in terms of productivity of the soil. So the products that companies have to offer in order to foster agriculture really have to be attentive to all the aspects of a soil becoming less productive, and using fertilizers which are suitable to the context of retaining, basically being able for the farmers to use less water. So this type of products, and it's quite innovative, I think, in terms of type of companies that we are seeing in the portfolio compared to what maybe it was in the past, because there are still, I would say, some interesting, I would say, access, especially in the US. We've seen some platforms on the educational side where the idea is really to connect a lot of districts, especially in countries like the US, where basically we think of the US of a very advanced countries, but sometimes in terms of education, there are so many districts and the people are lacking a kind of support also from teachers offering. So this type of e-learning platforms that are now starting are becoming more and more relevant. And then the measurability there, it's really quite easy to track. It's how many people are really able to finish and to obtain a degree using this type of platform or not. This is like the latest things that we've done.
Thank you, Barbara. So continue with this idea of the trends in terms of correlation. As you know, there are a lot of studies showing us a soft correlation really about this performance, valuation, and the impact of the business investment. What do you think that is going to be the trends, Pablo? We are going to see a gap of 2 digits in the future, next long-term future. What is the trends that you think that we are going to see?
Well, I think when we talk about global warming and aspects related to the challenges that we have ahead of us, I think definitely there is a huge need for changes in the use of materials in industries in general. So I think that is something that sometimes we don't pay much attention to that, but there are a lot of studies showing that you have to have a completely change in the supply chains and change in the uses of materials. For instance, think about engineering. You have to change the ways and the technologies that you use for building things. I give you an example. In our water and sanitation company, instead of continue to use concrete in building waste treatment facilities and wastewater treatment facilities or water treatment facilities, we started to use modular facilities of carbon steel that has a much less impact in the environment compared with concrete. Not only in terms of the production of the material, in terms of consumption of energy for produce the material, but also the fact that you consume less energy to pump water into the system. So this is an example in which we became carbon neutral in less than 4 years by changing the way that we build our facilities for treating water in this case, or wastewater in the case of this water and sanitation company. I'll give you another example. When we talk about ports, we have one of the largest grain port terminals that export grains to the European Union. This is in Brazil, in the up north of Brazil. We started to change completely the systems to digitalize the port, and that is about technology, to have track and tracing from where the soybeans are coming. Do we know if the soybeans are coming from, I don't know, areas that are connected with deforestation? Usually the trading companies, they are big international trading companies, they say that they trace, but not necessarily they have the full information. And if you are a port, you can have partnerships with ports here in Europe. There are the ports that are receiving the soybeans and having end-to-end with technology the tracing and the monitoring of that. That will have a direct impact on the discussion about deforestation. And when we talk about Brazil, we're talking about the Amazon, for instance, or other regions, super important in terms of impact, in terms of global warming. So 2 examples. But I think when we talk about industries in general, for instance, we are now investing in, we usually don't invest in mining, but we've been investing now in lithium production. In Latin America, we have Australia and Latin America, the 2 largest reserves of lithium. They are super important for electric batteries. I think we have to think about trends related to the changes in behavior of consumptions and technologies to really change the way things are produced or built. And I think that is driving our strategy for source opportunities.
And Elena, now for you, some examples with we can see this different performance and also continue with the conversation that we had yesterday. How important is the geography, or to compare exactly the same?
Yes, I think that to complement that Paulo says is that we need really to compare the same type of actives, no? The same type of investment vehicles. Because if we are talking about an investment vehicle that invests in development countries or not development countries, or with more tech or less tech, with mature companies or young companies in VC. So you need to ask to these specific vehicles different profitability, no? Different ratios to reduce the risk, no? To compensate the risk. So I think that this is maybe so obvious, but when we are explaining our project, no, to the LPs, it's not always the answer that we receive, no? That maybe we have a comparison, okay, your project is like this one, no? That it's very different, so we need to make an offer, an effort from the GPs to explain specifically our active, and from the LPs perspective to be really a clear vision about the different assets, no? And how to measure this.
So, in order to simplify the process, perhaps, do we need a standardization, Barbara, or can we find a collaboration with the regulator in order to find something that can help understand really what is the meaning of ESG investment or sustainable investment?
Well, it's quite, I would say, complex questions for all of us. I would say what we can do on our end at the moment, we can analyze what the regulator asks in terms of these different, now we are Article 9 funds, or what do we have to report. So we are at a stage where our main objective is, besides identifying the opportunity, investment opportunities, and we have really to assess the risk that the impact that we want to achieve with these companies is going to take place. So this is actually our, I would say, most important task. It's really to be there, to monitor and to report. And how do we do the reporting? How we establish a proprietary framework to develop the impact framework. And where we can ask more for standardization is probably basically at the data that we can, that are available, no? Because basically there are different data providers. So maybe it depends also the LPs can ask, what type, where do this data come from? How, why, And the idea is really to get, I would say, the opportunity to use raw data and then compare probably the best provider for each type of data, and finally define maybe at a regulator level, get an input on what type of data they suggest us to use. If we speak basically on a sector-specific basis, trying to identify the impact KPI, maybe that's what we can do. We all have our proprietary then framework that we can adopt and apply, but the standardization, it's maybe more on, on the data that is provided underneath, I think.
For you, Paulo, how important is the standardization for the future of the ESG investment?
I think it's super important to have, I would say, metrics that could be somehow used to, after we invest, monitor and report, especially for the reporting. I think what we've been trying to do at IG4 is to have all our companies, invested companies, portfolio companies, especially in the real assets environment, that is what we focus more, to have some, I would say, of the institutions, they are today trying to define metrics and monitor and compare with other companies to basically start to report beyond our internal reports and monitoring processes. So that involves GRASP, that we've been using to basically monitor our investments in infrastructure and real assets, B Corporation, or also the PRI, and that is what we've been trying to basically use beyond our internal process of trying to use standardization for comparing companies in different stages of our investment. I think, though, obviously, again, you have to have that in perspective when you think about emerging markets, because, again, as I mentioned already, depending on the way that you use the standards, you might not investing in something that could be super impactful in terms of sustainability, but you just do not invest because it's not yet there, or because it's not filling all the boxes. So I think that's how we see it, and I think, but definitely standardization, it's critical, and we've been trying to do it beyond, obviously, emerging markets.
And Elena, just to close this idea about standardization, what is the role of materiality, this concept around standardization that we hear a lot, and it is really difficult to understand around sustainability?
Yeah, so once again, it's a problem of the concepts, no? That it's quite new, no? And how to develop and how to present if you have material or you have this approach to the investment or not, it's not easy. So here the regulation it's try to help, and I think that finally maybe helps to do it, but at this moment it's an environment that it's complicated. From our view, it's not clear at all the definitions, and our approach it's very practical. No, it's okay talking about the ecosystem, no, with the players, try to help the regulator to make clear definitions, no, about all these concepts and to deploy it better for the future. No? So this is our approach. It's not clear at all, and we need to work together to make it clear.
We have a lot of things to do together
exactly.
about that. And yes, in order to highlight, and because we are in Spain right now, this is the decision in Madrid, Barbara, talking about this country, what are the challenge and opportunity talking about the ESG and sustainable investment here in Europe and more concrete in Spain?
Well, actually, what I'm seeing both in Italy and in Spain, there has been, I would say, a substantial improvement in terms of interest and knowledge of sustainable investments, both on the institutional side, but also on the retail side, on the final investor side. I was attending the other day the Spain SIF annual event where they also spoke a lot about sustainability, and where they were saying in the liquid markets we don't have so many retail investors coming to invest. Basically, it's mostly an institutional market still. So I think there are definitely a lot of opportunities, and especially because the investors, of course, we speak first about institutional investor. Why? Because they have to comply with the regulations. So also for institutional investors, the regulator is asking to comply. Most of them have now signed the PRI. I've seen more and more people, more and more companies really signing the PRI, but also being compliant then to the SFDR. So it's really an evolution which takes place, of course, in the whole of Europe, and especially in Southern Europe. Maybe it took a little bit more time to get used to the concept. Many are still asking what is going to be the cost of this. Now, is this any cost related really to, especially in the reporting side of the situation? There are a lot of consultants for example, pension funds that are appointed, or for institutional investor to check on the situation. So there is a cost, but it's, I would say, now with the COP taking place, so it's we have to live with it, and we definitely it's a big opportunity also for the companies as a whole, not to really participate more and more to this journey, which have started from the responsible investment, getting onto ESG, to sustainability, and then more precisely into impact. So I think that also for our countries, it's the time now, no, to be present.
Thank you, Barbara. And Paulo, for you, what are the challenge and opportunity that we can have in terms of the ESG and sustainability investment in Spain?
Yeah, well, even though we are very much focused on Latin America, definitely Spain is a country that we've been now learning more and more about with our office here in Madrid and our team here in Madrid. Obviously, I think there are some industries here that are super interesting, like renewable energy. I think this market is a market that we were talking about trends. Energy everywhere will be a big thing. It's already, we're experiencing now what is happening, not only here in Europe, but also with the climate changes. We've been seeing very, very much differences in countries like Brazil, for instance, in which the main pillar of energy is water, hydro, but with the problems involving climate change, we have to now change technologies to wind, to solar. And here in Spain, you have been investing in that for a long time and have, I think, a competitive advantage, especially in solar. I think now it's something super interesting. I think also in terms of infrastructures in general, when we talk about logistics, even water, that will be super important in regions in which to capture water, to basically treat water using new technologies, given that we will have a shortage of water globally as well. I think it's an interesting area to invest here. And I think this is something that, again, Spain has Telefonica, you've been leading telecommunications in Europe for a long time and in Latin America as well, based in Spain. But I think telecoms will change a lot. We've been investing in data centers, in fiber, but not fiber traditionally focused on the retail market, but more on the wholesale market, and fiber connected with small cells, with data centers, small data centers, a digitalization of networks using edge computing. I think that will be a trend given the consumption more and more of data, but also the fact that all the infrastructures will be digitalized. So we'll have telecoms in energy, telecoms in toll roads, telecoms everywhere. So I think Spain can lead that as well, given the experience that you have already. And we've been super focused on maybe not as the main purpose of our funds, but through club deals, also providing capital for a more opportunistic approach, special opportunities here.
For you, Elena, what are the challenge and opportunity that we have in Spain in terms of this environment?
Yeah, so we analyze different social challenges around Europe, and specifically from the office in Barcelona, from the Spanish perspective and the Spanish challenges. And maybe one of the sectors or subsectors or industries more interesting for us, it's the services or the caring services related with the seniors. Because as you know, we are very fortunately, so we live a lot of years, and but we becoming older, no, we lose some dependencies, no, we increase some dependencies, and we have a very social approach with our seniors here in Spain. So a lot of knowledge regarding how to solve or how to help our seniors to have a good quality of life until the end. And in our case, we have a lot of experience inside the GP regarding the handicaps, no? Because we have a lot of investments helping handicaps solutions that can be applied to the seniors because they are losing mobility or they are losing mental capabilities, something like that, that we can use all these learnings to push European leaders, no, from the Spanish market to the European problem. Yeah.
So, thank you very much. That was the conversation that we have. Perhaps you can give them some question or any doubt about this subject. No question. I understand. Too late.
It's too late, yeah.
Thank you very much. Welcome.
Thank you.
Thank you.
Hello, and good afternoon. I guess you can hear me well. So it is a pleasure to be here, and thank you very much for giving a voice as well to the venture capital industry and the startup community in Spain. My name is Iago Montenegro. I'm a partner at Mundi Ventures. Mundi Ventures is a venture capital fund in Spain with 200 million of assets under management. We actually have two strategies. In one strategy, we actually back Spanish entrepreneurs as well, particularly in B2B business models. And on the other strategy, we actually receive money from insurance companies, and we look for technologies that are interesting or that are disrupting as well the insurance industry. We invest in the so-called insurtech. So actually, I'm very pleased by what Ignacio said before, that apparently there is more and more coming money going to come from insurance into the industry, which is going to be very good for us. We have this unfair advantage. We are actually backed by insurers. I mean, they look at us more from a strategic angle. I don't think that any bond capital is going to be moved into our asset class. But yeah, I mean, like we actually have, we work in conjunction with them to identify interesting opportunities. So as I was saying, I mean, it is great to be here representing as well the Spanish ecosystem. As Aquilino said before, there are today over 10,000 startups in Spain. We have a very fertile ecosystem with more than 300 scale-ups. And among them, of course, I mean, we have here a reference today. The industry as a whole, was estimated as well by this report by ASCRI and Kibo Ventures as well, together with Dealroom. It is estimated to be about 46 billion of enterprise value, which is a huge increase, like almost fivefold since 2015. So in any case, I mean, it's just a fantastic environment to actually continue to grow, both the venture and the startup community here. So today I'm actually here honored to be with Andres Dancausa, that is a general partner at the Venture City. The Venture City is an international venture capital fund. It's spread mostly across Miami and Spain. They actually have invested in over 100 companies across Europe, the Americas, North America, South America. And they have fantastic companies that I will let you to actually explain. Before that, you were the CEO of iAhorro for many years, and you actually managed to exit that to BC Partners, which was a landmark transaction as well. And actually, coincidentally, both of you are graduates from the Complutense University of Madrid. So it's good to have some Madrid representation here. I'm Pedro Castillo. Pedro, very nice to have you here. So Pedro is the founder. You founded Divo in 2011, the founder and chief technology officer today of Divo. Divo is a company with close to 400 employees, with 2 headquarters now in Massachusetts, in Cambridge, and here in Madrid. He has raised over 120 million of capital with top venture capital such as Bessemer, Insight Partners, Georgia, and Kibo Ventures as well. So yeah, definitely is one of the reference scale-ups in Spain. You guys, as I understand it, you do security information, and an event management platform to provide kind of real-time data and insights to operational and security teams. So yeah, it's a pleasure to have you both. And yes, it will be great to actually learn more about your activities. Perhaps, we can start by you, Pedro. Today, Divo is a huge company, as I said, one of the references for scale-ups in Spain. But could you tell us, how it was in the beginning? Here growing in Spain. What are some of the challenges and the benefits as well, from growing in the Spanish ecosystem?
Well, so when we founded the company, it was 10 years ago. So the ecosystem 10 years ago compared with today is absolutely different. So we founded the company with a very, very small amount of money. So about 300 total. And raise money at that time was very, very complex. First of all, because in 2011 was almost one of the worst moment of the crisis. So there is not too much money to invest, and the ecosystem wasn't so mature as today. So right now we have funds as Kibo that have the three funds. So at that time was the first one, or even not started. So it was very, very difficult. That's one point. Second is a startup, a product technology startup in 2011 was something very strange in Spain. There is not too many. Even today, we have a lot of startups, but in technology, it's not the majority. So it was also difficult to attract talent at the very beginning. That this was fixed quite fast, but at the beginning was a challenge to get the credibility, to have people, top talent, to move from large companies to a company like us. On the other side of the benefits, we were running under the radar of our competitors for so long. And this was something very, very important for us. So building the same company in the Valley, probably all of our competitors can stall our talent immediately, so can kill you quite fast. So, and for us was very nice just to start building the talent in Madrid. Right now in Madrid we are about 260 and mostly engineers, because we have the development here in Madrid. And this is still true. So right now we are still almost protected for this for our competitor in terms to keep the talent in the company. That at the end is also part of our job, just to be at a very exciting place, just to keep the talent. We were awarded as one of the best places to work in US. that also help just to do that. So very difficult at the beginning for those reasons. Right now, much easier. I'm very happy to see how the ecosystem in Spain is growing. We have more and more entrepreneurs that are more funds with bigger funds that at the end help the companies to grow.
So thank you for that. And perhaps like the other perspective, this perspective of the venture capital. So for you, Andres, you actually have visibility. You have invested in over 18 countries. So what makes unique, the Spanish ecosystem?
Well, first of all, thanks, Askria and you guys for having us today in this incredible sunset. I don't know if you guys have seen what is happening there, but it's incredible the view we have. And congrats also to you. I remember when you were talking about your first round. My first round, I don't know why, was also around 300,000 euros. Probably everybody was raising the same amount of money.
Probably.
There's no more money in the ecosystem at that time. And Pedro is a really good example of what kind of talent we have here, right? Spanish talent, growing global companies around the world, right? So regarding your question, for us, Spain is unique. It's true that we have already invested in 18 countries, more than 110 startups in the last 5 years. But we have seen here unfair competitive advantage to attract talent. First of all, because here we have talent, tech talent actually nowadays. And second, it's simple, but it's very a strong reason, right? It's cheaper. It's basically cheaper. So you are most cost efficient when you are building your tech team, as you guys doing here in Madrid. If you set up your company, your tech team, especially in Spain, but you are raising capital from the States or from other funds all over the world. Hopefully in Spain too. Now I think the good news is that we have already money to invest. But those two things are like one of the best mix you can build in an ecosystem like ours. We have invested in a company. I think this is a very good example for your question. It is called Reloadly. This is an American founder based in Miami. He set up his first company there, and when he exited his first company, he decided to set up a second one, and he moved to Madrid, to Spain, actually to Barcelona. He knew Barcelona because of the Mobile World Congress. He fell in love with the city, and he brought his family to Spain, and now they have a company of, I would say, 50 people, tech talent, building the company there. Now we are leading the Series A, and this is a company that we discovered 3 years ago. And it's a very good example. He could choose wherever in the world, but he finally chose Barcelona, which is good news for us. Yeah.
That's very impressive, and it's a testament to the ecosystem. So perhaps continuing discussing about the ecosystem. Do you actually? I guess that you had many references, growing Divo, but I wonder, how in touch you are still, with the Spanish ecosystem, and whether you are able to highlight any reference, or any scale-ups that you admire, or any scale-ups that you believe that could make part of the future history, perhaps, of the ecosystem here in Spain.
Well, I think that, I don't know, Flyware is one company that did the IPO some months ago, and they are doing amazing. So that's as an example, because at the end is what we want to do. So we never thought in the company or build or prepare the company to be acquired. We work in the company just to make sustainable and continue growing. And if an exit can happen. But when we saw companies at Flyware, for us it's very important, it's very impressive, and it's an example. Here in Spain, we have very large companies, perhaps not in our world, it's more in the B2C as a global Cabify, that are amazing companies, very different than us for obvious reason, but at the end they are doing good. You have talent that perhaps is more close to our environment, something similar. So I think that all of those companies are clear examples for the ecosystem. And I think that we should be as much as possible in touch with the new entrepreneurs, just in case we can provide to them something that they can see the value. I don't know if that's if they can see the value, because every company is a different world, but as much close we are one to each other, I think that is much better for the ecosystem.
Definitely, yes. I mean, are you as well an angel investor, or do you actually invest or get engaged as well with early stage startups?
I am. I invest in some companies in very early days, so trying to avoid what happened to me at the beginning. So yeah, I am invested in 3 or 4. And that's something that is I am very grateful, because you are part of the beginning of companies, and I am learning from those companies that they are very, very new companies, but even learning from them. So that's amazing.
And if you allow me, I mean, coming back to the first question again, so for those new companies, that you are supporting, I mean, do you feel that they have now a more kind of nurturing environment, on where to grow, or I mean, compared to what you did, 10 years ago?
I think that that's true that the ecosystem right now is absolutely more mature than 10 years ago, but the challenges perhaps are just different. So I don't think that for them is easier than was for us. I think that the challenge that they have are different. For example, right now they are competing with a lot of other startups. That wasn't my case at the beginning, for example. Or yes, that's true that there is more money right now in the market, but also the condition, and they are competing for the same money. So at the end, I think that the challenge is just change over the time, and they need to be ready just to deal with those challenges. Talent retention and acquisition, I think that is, for me, is one of the most important part. At the end, a company like a startup is the team. Is the most important one, especially in the first year. But even today, that we are about 400 people, is still the team. So I think that is the situation in which we can help them a little bit and learn how they are doing, because they have some very impressive ideas about how to scale the companies, how to get the money, how to deal with the current challenge in a more global world than 10 years ago.
No, very good. And perhaps moving on to the subject of competition for money, that you were highlighting. I mean, do you feel, Andres, that competition for money in Spain versus versus competition across Europe or competition in the United States, does it actually have an impact on valuations?
Yeah, for sure it has, right? But this is a very interesting and tricky question, because when I speak with other VCs in US, but not only in US, also in Europe, they always tell you that valuations here in Spain are so low, right? And when you are talking to a VC here in Spain, they say, wow, the valuations here are increasing, right? So I guess that it depends a lot on who you compare yourself with, of course, as everything in life. But at the end of the day, our vision is that the companies that we are investing right now, they compete with the ones that are raising money in San Francisco, in Berlin, or in London, right? So it's important to understand that we need to see where the balance lies in order to get good prices when we are actually buying stock from a company, but at the same time putting enough skin in the game for the entrepreneur for the future, because at the end of the day, you are going to compete, as you said, with other startups all around the globe. And if you are less incentivized than the CEO of your competition, the likely for you to win the market is in a way lower, right? So if you are a long-term vision, which is actually our vision in the VC world, we need to understand that sometimes cheap means lower returns instead of good prices, So, yeah, for sure, when there is more money, for sure the valuations are increasing. But we think that still in Europe, there are really good opportunities, We see this in Spain, but also in France. Our last investment comes from Berlin, and it's an incredible company building their platform. And I would say the valuation is fair for both sides, for us and also for the founding team.
Quite interesting. And perhaps, I mean, the same question, but with a slight tweak. But do you feel actually that the valuations that you have received, like historically, have they actually been fair, compared to international standards, or how fair is they?
In general, I think so. I think so. Especially when we make the trip to US and start dealing with US investors, I think that the valuation that they put in every round for us was fair. When we were in Spain, that again was a lot of time ago, I think that the ecosystem at that time, the VCs were more scary. For a company born in Spain, that our natural market is in US, you will be able to do the trip to US. So there is these concerns at the end also are part of the valuation, because to avoid the risk. So, but once we did the movement and we domesticated the company in US, we got a VC that was a small one, but helped us to do this movement. After that was Inside Ventures, and last year we were with Bessemer Georgian, and the valuation was fair in the average of the multiple by ARR in our space. So very happy for that. Yeah.
No, very good. So it seems that there is some slight pressure, on the early stages, but actually that kind of normalizes, as you go a bit into the later stages.
It's a matter of growth at the end. So we saw a big change in the last year. We are doubling per year. So this reduces all the frictions.
For everybody, right.
Exactly. But when at the beginning you are not on this, and you are with low numbers, so you need to do the trip to US, you need to keep the talent. So there is a lot of concerns that at the end are part of have lower valuation. But after that, I think that the problem just disappear or could disappear.
Understood. And Andres, before I ask it Pedro about some of his favorite startups. So I mean, like, of course, I mean, like, you have like a great portfolio. I mean, you are screening startups constantly. Yeah. So what are some of the best and your favorites, within the Spanish ecosystem?
Yeah, let me tell some from our portfolio, but also some from other portfolio, because we've seen an incredible portfolio in some other VCs. Actually taking, this study that you guys in ASCRI and also Kibo launched, I think a few months ago with all the scale-ups in Spain. I think this is a good sample of what kind of company we have. So I would say that Reloadly, this one that I told you, it's a really good scale-up company. Dixper, also from our side, is a gaming platform. A new one, which probably somebody don't know yet, which is Plexigrid, energy tech company based in Sweden, but also in Oviedo. This is another good example of tech talent raising in a small city in Spain. Are really good examples of companies that we really think they're going to shape the future of the industry. But also, we are not invested in Genially, and this is a company that I really like, and it was also in your study. What else? There's a ton of them, right? But Belvo, also a company that we did invest, a really good one. Barku actually is a company from your portfolio, right? Mm-hmm. I think there is now huge company there with an incredible future to build. And now the good thing is that they are well funded. So we really think that we are going to have winners in Spain in the following years all around the world, building companies all around the world.
So hopefully, yes, as we said before, the ecosystem is growing fivefold, within 5 years. So I expect that to continue a trend. No? I heard before actually several times that one of the favorite statistics from this report is that Spain is within the top 5 in the number of potential future unicorns. I always have my doubts about how those lists are made, but in any case, it's very encouraging to see so many promising companies within the ecosystem. So perhaps Pedro, before you mentioned a bit and you discussed about the past, of Divo. So what is next? What are the next stages? What do you have ahead of you?
Wow. So our goal is continuing our growing path. So we are growing a lot, especially in US. But right now, the 80% of our revenue came from US. And that's because we invest a lot in marketing there and in the sales in US. But what about the rest of the geographies? So we are start doing business in Australia and APAC 6 months ago, and we are starting to see the revenues there. And there is other regions that we want to invest in Europe. We start opening and having people in German, French, UK, and Nordics. So the expansion is a big part of our near future. And we are very focused in the security market. We are getting an amazing traction there. But there is other use cases in which our technology is also for that. We are a generic data platform at the end, right now focused in security. So at the right time, that perhaps will be 18 months, 2 years, we want to expand to other use cases, IT ops, DevOps, other use cases that there is a lot of traction. And our goal in terms of the revenue, that is one of the most important part, is continue our path. So double. So it's what we want to achieve, and it's in our. We are going for that. And at the end, our goal is to. Not our goal. One of our main milestones is to do an IPO, because the life don't finish at that point. So I think that's something that all of us are very, very excited for the idea in some years, who knows? And let's see what happens after that. So looking for that.
Yeah. So I actually want to keep the session brief. So I mean, thank you very much. I mean, for the insights, the answers, the amazing experiences that you have shared. And perhaps I would like to open it, to questions. I think that perhaps somebody, like within the crowd, wants to make any question to the venture capital industry or startup community here present. So
there is no sun. There is too late. For
yeah, exactly. Like everybody's expecting the cocktail, so I won't actually hold it anymore. And thank you very much to everybody, and thank you, of course, to Pedro and to Andres for being here.
Thank you.
Thank you Thank you very much.
Hola. Okay, so thank you very much. I'm sorry to say to our online attendees that the event is over for them, but for those who are here, we can enjoy a very nice cocktail. Thank you so much to all the speakers that have made it possible and they have shared with us their thoughts. Thank you very much to Askri again, and thank you very much to all the attendees for being with us here. So please, let's enjoy the cocktail. Thank you so much.